While crypto Twitter debates whether altcoins are dead, Cardano just got added to Grayscale's new ETF alongside Bitcoin and Ethereum, and price is testing a make-or-break level. At 55 cents, ADA sits at the bottom of an ascending channel that's held since early 2024, with the weekly RSI printing its 7th consecutive red candle. Oversold? Maybe. But here's what matters. This exact zone has acted as triple bottom support, and we're seeing fundamental developments that could shift the narrative. In this breakdown, I'm walking through the technical structure, the institutional validation happening right now, and why my position strategy focuses on this specific price range. The question isn't if ADA moves, it's whether this is accumulation or distribution. Cardano's at 55 cents after spending October grinding between 60 and 70 cents, essentially range-bound. The broader market's been choppy, and ADA's mirrored that uncertainty. Most traders are either sidelined or extremely cautious, especially with ADA down roughly 60% from that December 2024 local top at $1.30. Sentiment's mixed at best, with critics pointing to the slower transaction activity while supporters emphasize the ecosystem developments happening beneath the surface. But here's why this video matters now. Price is retesting the lower boundary of a year-long channel while multiple catalysts are converging. We've got institutional validation through the Grayscale ETF, major partnership announcements, and technical indicators showing extreme oversold conditions on the weekly time frame. This combination doesn't guarantee a reversal, but it creates a setup worth analyzing in detail. The fundamentals are telling one story while the chart tells another. Let me show you both. 3 major developments converged this past week that changed the conversation around Cardano. First, Grayscale launched their Crypto 5 ETF, and ADA made the cut alongside Bitcoin, Ethereum, Solana, and XRP. That's institutional validation at the highest level. When traditional finance puts Cardano in their top 5 crypto basket, that signals long-term conviction. Second, Cardano's decentralization metrics just got highlighted across crypto Twitter. The Nakamoto coefficient shows ADA is more decentralized than Bitcoin and Ethereum, according to Edinburgh Decentralization Index data. For a blockchain positioning itself as the most secure and decentralized platform, this matters. It's not just marketing, it's measurable. And with stake pools operating independently across every continent, the network's geographic distribution adds another layer of resilience. Then there's the ecosystem expansion. Viridian, Cardano's open-source identity wallet, just joined Chainlink's ACE partner ecosystem. This enables institutions to create verified identity credentials on-chain, a major step for enterprise adoption and regulatory compliance. Meanwhile, Base announced CB ADA borrow markets are now live, expanding DeFi utility. Now, not everything's perfect. Liquidity remains an issue on some decentralized exchanges. One user showed losing over $1,000 on MinSwap slippage, and another $500 on aggregators. That's a real problem that needs solving. And Joe from Dead Cat raised valid concerns about transaction volume, pointing out ADA is averaging under 30,000 transactions daily, while sitting at a $24 billion market cap. The foundation has serious treasury funds, but the question remains, where's that capital going, and why isn't usage growing faster? These are fair critiques that long-term holders need to acknowledge. Let's zoom out to the weekly time frame, because that's where the major structure lives. Since mid-2024, Cardano's been trading inside an ascending channel. You can see those parallel orange trend lines framing the entire move. Right now, price is testing the lower boundary around 50 to 55 cents. This isn't just any support, it's where we've seen 3 distinct bottoms form, creating what technicians call a triple bottom pattern. But there's another critical element. That descending trend line from the December peak at $1.30. Price got rejected at this level in February, August, and September. Each time ADA tried to break above it, sellers stepped in. That's resistance we need to clear for any sustained move higher. Moving averages tell the bearish story clearly. ADA is trading below the 10, 21, 55, and 100-period exponential moving averages. All those colored lines stacked against us. The only support we're clinging to is the 200-period simple moving average at this exact level. If we lose the 200 SMA on a weekly close, the technical structure weakens significantly. Now here's what gets interesting. The Fibonacci RSI is deeply oversold, printing its 7th consecutive red candle. Historically, weekly oversold conditions create opportunities because you're not buying into overbought euphoria. The volume profile shows the point of control at 38 cents. That's the price level with the highest traded volume. If this channel breaks, that zone could act as a magnet pulling price lower. For my Fibonacci work, I've anchored from the 130 high down to the 50-cent triple bottom. Key extension targets. The 1618 level sits at 180, and the 2618 extension, which aligns with the channel top, comes in at 260. So what's my strategy? I'm loading between 48 and 60 cents, this green accumulation zone on the chart. For short-term traders, a weekly close below 45 cents invalidates this setup, and I would exit. I'm holding a long-term position from last cycle where I've been taking profits at highs and lowering my average entry. So I would hold even through a channel break and look to reaccumulate at 30 cents if we get there. My take profit targets. First at 95 cents where that key resistance sits. Second back at the December high of 130. Third at the 1618 fib around 180. And final target at 260 if we reach the channel top. Synthesizing the technicals with the fundamentals, here's what I see. ADA is at a critical inflection point where institutional interest is building while price tests major support. Best case scenario, weekly close above 70 cents, reclaim the descending trend line, and we start working toward that 95-cent resistance with a timeline of 2 to 6 weeks. Worst case, we lose the channel, drop to the point of control around 38 cents, and enter a deeper reaccumulation phase lasting months. So, what would change my thesis on Cardano? A weekly close decisively below 30 cents with increasing selling volume. That shifts the structure from accumulation to distribution. Conversely, a weekly close above 70 cents with volume expansion confirms we've bottomed and momentum's shifting bullish. Right now, we're in that uncertain zone where patience and risk management matter most. Bottom line, Cardano is at a technical and fundamental crossroads. The chart shows a key support test. Meanwhile, institutional players are making quiet moves through ETFs and enterprise integrations are going live. My approach is treating this as an accumulation zone until proven otherwise, but I'm managing risk tight because the structure could still break lower. The opportunity here isn't about catching a quick pump. It's about positioning in a zone where risk-reward favors patient capital. Whether ADA delivers on its long-term vision remains the big question. But from a trading perspective, this setup has defined levels and clear invalidation points. If this breakdown helped clarify the ADA picture, destroy that like button, helps others find this analysis. Join my free Telegram for daily updates and faster trade alerts. Link is in the pinned comment. I recently covered Chainlink and Polkadot setups. Check those on screen if you want more altcoin analysis like this. Thanks for watching. Never financial advice. See you tomorrow.